What was that first day like for you, man? Because everyone went nuts. Like, you turned into an internet superstar like overnight.
I looked at the market structure, and the market was just like massively long with funding rates at like 80%. And I'm thinking, okay, the only way how we can really unwind this if these things are not going to get approved. And basically, we came out with a relatively carefully worded report with an 8-9 page that basically suggested to hedge some of the Bitcoin exposure in case we get like a non-approval, in case we sell off. Basically, it was more like a relative value.
Warning. It was more like a warning.
There was like a journalist who picked it up and was like, ETFs will not get approved. And that's when Bitcoin basically tanked 10% within like an hour. And the problem is we only have like a teaser online. And then, of course, the teaser was just like, hey, they might not get approved, blah, blah, blah. It's just a summary.
You're a bro here. You were with us at Insto Fomo more than a year ago. In fact, the last time the four of us got together was just around the Luna crash. In fact, it was crashing as we were running the event. So I think it's almost serendipitous that we're here talking today, now that we're pretty much halfway through the bull market, if not, depending on what Markus thinks, and might even be past it. Welcome, everyone. This is, of course, Alpha Uncovered, where we speak with and talk to some of the most insightful investment managers and advisors in Asia and the world, and we look at alpha-driven products, including crypto. Joining me here today, of course, is Markus Thielen, CEO and founder of 10x Research, Marco Lim from My Capital, one of the first hedge funds that specialize in blockchain and cryptocurrencies, started here in Hong Kong, and Mr. Teong Hng from Satori Research, co-founder and CEO of a digital assets platform that provides investment solutions for institutional investors. Welcome, guys. It's good to see you. You know what I wanted to do, Markus? I wanted to bring up screenshots of the day that your call on US ETFs and then like post them up. Like, remember when you went viral that day?
No, when was that? I don't know.
And I wanted to like post up screenshots and be like, what was that first day like for you, man? Because everyone went nuts. Like, you turned into an internet superstar like overnight.
Do you want an answer?
Well, yeah. It's an honest question, man.
Well, we looked at these ETFs like very carefully with US lawyers, and they were arguing that the approval would be pushed out. And while I was very bullish up until literally the last moment, I looked at the market structure, and the market was just like massively long with funding rates at like 80%. And I'm thinking, okay, the only way how we can really unwind this if these things are not going to get approved. And basically, we came out with a relatively carefully worded report with an 8-9 page that basically suggested to hedge some of the Bitcoin exposure in case we get like a non-approval, in case we sell off. Basically, it was more like a relative value.
Warning. It was more like a warning, right? It was more like a cautionary tale. It wasn't a full-on negative call, was it?
It was not, but it was, there was like a journalist, I think at Blockworks or something like that, who picked it up and was like, ETFs will not get approved. And that's when Bitcoin basically tanked 10% within like an hour, and the problem is like if people like on Twitter were like, hey, this is just like a 1-page report. This is like nothing, right? And of course, because these reports are providing for Matrixport, they are like for their VIP clients only. For everybody who has like 250K with Matrixport or more. So they get like the 8 to sort of like 10-page report that we write every week. But of course, we only have like a teaser online. And then of course, the teaser was just like, hey, they might not get approved, blah, blah, blah. It's just a summary. And I think because everybody was like, hey, let's sell to the boomers and just like, dunk on the boomers, and everybody was like so long. And it was just from a trading perspective. I mean, you don't want to stay long until literally the last moment. And I think that's when the market came off. But it was really just a matter of, I don't want to say clickbait from journalists who jumped on it. But I think if you don't read the full report, well, you're missing out. And I think the idea was, of course, for Matrixport clients to hedge themselves before the sell-off came. But of course, it just went like literally like extremely quickly. And I think the important point is interesting because like Marco was also mentioning it in the chat like yesterday or the day before. you're mentioning it. I mean, I haven't heard anybody really talking about this, right? But we also had like some really like amazing calls. We predicted in October 2022 the halving price, and we were off by something like 150 or 200 points, but literally like less than 2%. And same as like on February 1st last year, we came up with a Christmas target of like 45,000, and we were something like at 43,000 something. And when we wrote it, Bitcoin was like at 20,000, right? So I think because we had some really like outrageous calls that we had a lot of credibility. And the problem I had a little bit is that we're writing these from a trading perspective, versus a lot of the stuff you get from Bloomberg is literally inside information from the SEC, like sending trial balloons or giving the market a heads up. I think some people in the US were like disappointed that we didn't talk to Gary, and Gary gave us like the heads up, selected us to kind of deliver the message. It's really just, we look at the market really from a trading perspective, and is the risk reward in your favor? And again, I think that report on page 8 was saying like, hey, in case they don't get approved, you rather hedge yourself here, because yes, we have made like a lot of money because we were really like massively bullish. And then of course we sort of like predicted the sell-off anyways. And I think we got the sell-off in January, contrary to what everybody else was saying. And then by end of January, when Bitcoin was like at 40,000, dropped to like 38, but dropped to that to, rallied a bit to 40,000, we came up with a report to, for people to buy again with a price target. And here, early February this year, we came with a price target of 70,000. And we said, that's it. And Magic Sport says, oh, that's like so, bearish, why are you not like, where's 100, where's 150? And I think with 70,000, we look pretty good now. I don't know. I think we're using, a lot of quant analysis. We're using market structure analysis. And so I'm okay.
Markus, do you think the reaction would have been different if you approached it, or if it was articulated from the perspective of, hey, worth a hedge, market structure looks like it's inviting the market makers to come and clean you out, and this is kind of, we're at the precipice of that? And do you think that they would have looked at it differently? Or do you think the crypto version of mainstream media were actually looking for news just to trigger that bearish sell-off?
I'm not on the fence guy, and we don't write research for people on the fence. And I don't think anybody wants to read research from people that are on the fence. I think when you look at a lot of the crypto research firms, especially in the US, that are regulated, and of course there are not many, so you probably can figure out where I'm going with this. There's a lot of research like, hey, what happened like last week, what happened last month, and we think Q4 is going to be volatile.
Yeah.
I mean, nobody wants to read that, right? So, I mean, the main readership, I think, from Matrixport are VIP clients, hardcore traders, Bitcoin miners. They want directional views, right? Of course, directional views is not always easy.
It's not a prediction. It's just a call. It's just a view, right?
Yeah. So, but I think it needs to be sort of like really where this leads to it. The point really was that the market is like so one-sided. There's huge risk of a sell-off. And, we were actually on CNBC, and we talked about how, we had this massive ramp up into December 2017 when the CME futures were launched. We had this massive ramp up into the Coinbase IPO, April 2021. And we had this massive ramp up into the Bitcoin ETFs based on futures. They were launched in October 2021. So I think you can make all these arguments that here's another listed product that's going to be launched, and it's going to take some time. And I think with a lot of the research we write, we just put our opinion based on some of the data we're seeing, right? Even like we came up with a report, I think March 10th this year, where we said we think the Bitcoin ETF flows are going to dry up because they're all going to be just simply hedge fund arbitraging the funding rate. And that sort of like sets up like a positive mechanism. And we got some hate mail for that. People said, we're going to like report you to the SEC. How can you say the ETFs are like drying out? And yes, 2 days later or 3 days later, we had like $1 billion of inflows into the ETFs. And sort of that was the last thing for like 2 months. And then they magically dried up. And I think what we know now from the 13F filings yes, Millennium bought like 2 billion in Q1, but they quickly sold at least half of it or around half of it. A lot of other hedge funds are out, and I think the market has changed, and I think we want to be ahead of the interpretation of it, right? We don't want to like be a regulated crypto research company telling people now what happened in January with some like safe buffer, right? I mean, yes, some of you are wrong because you never see everything, right? Even if you work for a large bulge bracket bank, you don't see every flow. You don't know when the big guys coming and changing their positions. But of course, when you see it, you can interpret it and you can figure out why they're doing this. And I think we wanted to be a little bit more active, more trading. Yes, there's a lot of hypothesis, right? Hypothesis needs to be tested. But again, I think we don't write research for people to be on the fence. We want to make money in the market, and we always have approached the market from a trading perspective, and that's really just what leads to our trading calls, right? I mean, the same people, right? One last point, right? When you look back in October, November 2021, there was literally nobody saying the halving cycle just tells you to sell now. There was nobody saying this, and we gave actually a presentation I think in April or in May 2022, and we're saying if the halving cycle, it was here in Singapore for like 300, in front of 300 people, if you believe it in the halving cycle, you're going to go down until October 2022. And Bitcoin was at 40,000. And of course, we went down, for another 5-6 months almost, or something like this. So I think that the people, that are now telling you believe in the halving cycle, those were the people still telling you be maximum long or irresponsibly long in October, November 2021, right? So I think in crypto, you need to either have like really good info or very often go against consensus. I think that's just how we approach the market. And
yeah, much respect for that, Markus. I think it's good to kind of hear this out as well. I know you had a lot of opportunities to, but...
And Alvin, I agree and I disagree with certain points that Markus made just now.
Yeah, let's talk about it. What do you think?
We're in an attention economy right now. So, Markus, and I know that he writes really well. I read his books. I basically go through page by page. He's a very eloquent speaker and a very good writer. However, people will just rush to conclusion. You can write 8 or 10-pager report. People will just pull whatever they want to see. And that's a lot of sensationalism. So that's one thing, right? So, and again, like Markus, he writes for the audience whereby they are professional traders, which probably will be like, maybe 1% or 2% of the whole crypto trading industry. Even myself, I think of myself as more of a retail once in a while if I trade for my own accounts rather than for clients. So the point is that he is very tactical, but for most 98 to 99% of traders, which are retail, I think the better strategy for them usually is just to buy on dip and very selectively like Bitcoin. What he writes for the smaller tokens, right? Maybe, he points out very well for Aave, for Polkadot, for Cardano. He trades very tactically. So these are some of the points that I think I need to kind of like for the benefit of some non-professional crypto traders.
Yeah, that's a fair point. I do want to get actually into the topic of where instos need to be, like in terms of positioning themselves from an allocation perspective.